All right, what's up, everybody? Welcome back. Happy Friday. Hopefully, you guys are all having a great day. We got a couple of stocks on watch today. Let's see. Yeah, we got people joining in right now. Oh, the store should be closed. Nice to see you. All right, what's going on? If you're just joining here, say what's up in the chat. Let me know you're here right now. We got Market Taker, we got Wayne, we got Freedom Quest for Life. Sweet. Well, welcome in, folks. Nothing too special right now for me. I don't have a whole lot I love on watch today, so to be honest with you, oh, and by the way, if you guys are just tuning in right now, I'll drop that reminder in a minute. But as I was saying, one of the big things in the market right now is basically there's a bunch of stuff coming out today. There's I think there's metals reports. Let's see. So we got U.S. unemployment that came out at 8:30, so it came out like an hour ago. Payroll, non-farm payroll data at 10 a.m. So in about 30 minutes, we've got the Supreme Court tariffs decision. That's going to be really big. It could create a ton of volatility. And I don't really know like what, again, I'm not really a macro guy, so I'm more just interested to see what that plays out like, regardless of what happens. And then at 10 a.m., the Fed also speaks. And then at 3:30, we got the U.S. metals net positions data coming out as well. So we got a lot of stuff today. My point being, we got a lot of volatility. Lots of volatility today. So the reason for me kind of saying this here is that, you know, I'm not going to try to get overly aggressive out of the gate. And days like this, on days where we expect lots of volatility in the market, we can see a lot of chop as well. And like, again, volatility in small caps, yes, but sometimes hard to read. Now, my main watch today is probably going to be Lucy, setting up for a bit of a third day surge breakout. You know, my friend and I were talking about this. He kind of was looking at it as a joke at first. And then before he knew it, he's like, this is actually a decent setup. So you got a breakout level right around here at $2. Again, not sure what that's going to look like in terms of we haven't broken out in pre-market yet, which is okay. I don't mind this. But yeah, I'm just going to be looking for a dip and rip out of the gates on this. Keep it plain, keep it simple. Don't need anything too crazy here. And yeah, again, I'm keeping an eye on silver as well. Silver is, so here's my kind of game plan for silver. If we break out over this $74 high, I mean, like, buckle up. So right now we've got a fake breakout. We've talked about this concept on the stream before. This is a fake breakout. If we break out the fake breakout, mamma mia. Just like, I don't know. I mean, again, from a purely technical standpoint, could get really fun. So anyhow, again, you know, unfortunately, the oh, by the way, well, I got a couple of minutes here. Reminder, and I'll remind again, but for anybody here that is new, I have a blog now, and I was actually writing about outlooks for today in my blog. And so for those for those who want to read my blog, I'll drop the link to subscribe to that. But yeah, basically it's recapping my trading, going over trading concepts. I started it a couple of days ago, and the reason I'm telling you this is, number one, I was talking about the housing market yesterday, how the government's looking to buy up to $200 billion of mortgage bonds. And I thought that could kind of create some momentum in the housing space. Not bad what we've seen, but definitely nothing impressive. But number two, I'm promoting my blog here because anybody who subscribes to my blog and leaves a comment, I'm choosing somebody at random next week to do a one-on-one trading review session with for about 60 minutes. We'll hop on Zoom and literally just talk for like an hour about trading. So if you want to go ahead and subscribe to that blog, I just dropped it in the chat. There you go. If you're on Facebook or YouTube. So go ahead, subscribe to it, leave a comment on a blog, and I think it could be fun. Yeah, I was talking about the housing stuff yesterday and my outlook on silver, which, again, for all intents and purposes, I am not a macro trader. I am not a macro guy here. So definitely not like the best person to be talking about this stuff. But from a trader's perspective, I wanted to show you what was kind of going through my mind there. So anyways, Lucy, small cap wise, I would say this is my top watch for the day. And right out of the gates, I would just like to see a quick dip on this thing and a break over those highs. I buy in anticipation of that $2 breakout. Look to scalp into that move. I'm not looking to hold this to like $3. But man, if we could just get like a really strong $2 break going to like 210s, 220s, I'd be pretty stoked. Pardon me, hiccups there. I'd be pretty stoked. I'd be looking for a sell right into that. So yeah, that's kind of my game plan. Nothing major today, but Lucy definitely is at the very least setting up for a nice multi-day setup. So hopefully we can get a trade out of it. If not, it is what it is. I'm heading out to Vegas today. Any of you guys that are in the inner circle, I'll be seeing you there. But I'm heading out early. So yeah. Guys, we got 1 minute until the market opens. Just gonna keep a close eye on Lucy here. And let the market do its thing. All right, we got our dip out of the gates here on Lucy. It's a good start. Oops. All right, so basically on Lucy, I'll be looking to buy a 190 break. So hoping for a break of 190 into this would be phenomenal. Nothing so far there on Lucy. That's unfortunately a little bit more of an aggressive dip than I was hoping for. But not yeah, that's don't dip too far. No, we went red. That's a huge bummer. That's a huge bummer. What are you gonna do? Well, this is why we stay patient, I guess, at the end of the day. So again, I'm really curious. I just want to be keeping a close eye on silver and gold. Not actually silver and gold, just silver. Again, just singing the Christmas song there. Silver and gold. You know the vibe. So I'm curious. One of the main reasons I'm curious here is because we've had this theme. If you read my blog, which you should go subscribe to. Why are we so weirdly zoomed? Oh, this wick, that's not even real. Okay, well. There. Okay. Well, I'm curious because we finally got a gap up on silver. Right? And so it's been acting really weird the last couple of days where we'd get big run, gap down, big run, gap down, big run, and now finally gap up. Right? Like now we actually gapped up. So do we do the inverse now? Do we gap up and then fade? Now, remember, we've got metals data coming out today. So regardless, I think there are just going to be people that are placing bets on that. Yeah, that's kind of where I'm at right now. It's certainly what it seems like. Just a lot of speculative betting regardless. I wanna go away. I can sing louder for you guys next time if you want. Alrighty. So, anyways, Lucy is a bit of a dud, sadly. What's SHPH? This was running after hours yesterday, if I do recall. Why are we running today? It didn't have any news. Okay, I gotta say this kind of sucks because I wanted to log. I mean, it doesn't matter because I didn't. But what in the world? There's no news on this thing. It gaps up yesterday, fades back down to such weird action. By the way, housing theme kind of looking strong. OPAD, OfferPad Solutions, break into new highs. Yeah, all right. We like to see this. Good housing market theme. We need a new theme. We need a new sector. By the way, Lucy's coming back. I will still buy Lucy. I don't care. She's got to get through that 190 level. I don't like the risk as much anymore. I was hoping for some tighter risk. But you know what? Man, we get through 190. I don't care. I will take the trade however it comes. Probably just risk basically red-green, which is like 173 at that point. I should add, by the way, the red to green line. What? Am I clicking the wrong thing? I am clicking the wrong thing. My computer's so slow. Previous close. Toggle close indicator. There we go. That's red-green. I should have this on every chart. Makes it so much easier. Anyway, again, so for those of you guys who are not, who have not been reading my blog, which you should be doing, I'm gonna keep plugging my blog because I'm having so much fun writing it. Actually, I'll tell you why for two reasons in a second. But those of you guys who are reading my blog, you'll know that I'm in a drawdown right now, and it's actually like my worst drawdown in quite a while. It's nothing crazy. It's nothing I can't make back, but I just haven't really drawn down much lately. So this market has certainly been a test for me in the last couple of weeks now. I'd say it's been going on for like a week and a half. And to me, it's signaling that something is kind of deeply wrong in my trading right now. I shouldn't say deeply wrong. It makes it sound like the world is ending, but something clearly is not working the way that it should for me. And so I need to make an adjustment. And so one of those adjustments is just really, really focusing on selectivity, being extra selective, like to a fault almost. I want to, if it's not setting up in a near perfect way for me, I don't want to be trading it. And right now, Lucy is, again, my favorite thing because we've got that third day surge aspect to it. A lot of just overall momentum in the market, but I don't want to be going and trading a random thing. I don't want to be going and trading random crap. I want to be focusing on what I perceive to be the easiest trades. And by the way, we're starting to break out on Lucy. All right, I took a position here on Lucy there at $1.90. A lot of hidden selling. I don't love that. What's my average on Lucy? It is 190. Hidden selling going on. I got in a tiny bit early. For whatever reason, thought we were already through 190, but it's okay. Got a small starter position. This rate, I'll just risk that 173. There we go. We're popping through. Let's see. Again, I'd love to see this through $2. I'm not looking for a banger home run trade, but if we can get 210s, 220s, I'd be a pretty happy camper. The multi-day breakout level on Lucy is $2. So we're a couple of cents away from that actual breakout level. Hoping this doesn't turn into a failed breakout here. Which kind of so far it feels like it. Okay, all right. I just didn't love that there was so much hidden selling at 190, and as soon as we got through it, we're struggling. I still don't love it, but not going to complain too much yet. But if we're not holding this, if we're not able to hold this level very well, I'm certainly going to be considering, just keeping my risk in mind. Which again, this point, I feel like my risk. Again, make sure anybody trading something like this is sized in properly. For their risk level, but I think risking red to green for me is kind of perfect. We held that level really well. And again, it would be a 1-to-1 risk reward trade. Getting into the breakout a little bit early, but I do like this spot. We really got to push through pre-market highs here at this point. That's our next key level there, and then $2. And from there, I'm hoping we can just get some short-term momentum through that. Well, we're getting some bid support here on 187 at the very least. Again, this right now is kind of feeling like a failed breakout over that 190 level. You got to hold that low. 173 is my risk. Now, depending on how this plays out, if we curl back through 195, again, if we can hold VWAP roughly here, make a higher low, and again, this would be a bit of an aggressive approach, but I would not be super opposed to adding through this 195 level. Again, kind of my concept of this being, we get this, what looks to be a failed breakout on a lot of volume. We come back down underneath that breakout level. If we just break out right back through that, to me, that's a good sign of strength. Setting up how I'd want to see it. And if I were looking to short this, I would be pretty nervous of a breakout through this now. So we'll see if it can properly set up here. By the way, OPAD is still going really strong. Nice little dip there. Come on. 187 is still trying to defend. Definitely feeling like a failed breakout, a failed high day breakout right now. Now, inversely, if this ends up breaking down here, like completely under low a day, it's probably a pretty good short at that point for the same reason that I would want to buy that if we break out over that high. I'd be looking to short it if we break down under that low. We just trap a bunch of longs who are getting all excited about this third day surge, good momentum, and then it just fails. So definitely keep that in mind. It's if we start breaking down here, a really solid chance we don't come back. So yeah, we'll see here. Make sure anybody trading like this is managing the risk properly. There's no need to take a stupid large loss. Especially, again, I don't know about you guys, but I could just speak for myself. Trading's been tough for me lately. Trading has not been very easy. So during times like this, it can feel really tempting, right? And by the way, I'm saying this for you guys as much as I am for myself. It can feel really tempting to try to oversize on a trade to try to make back previous losses. Believe me, I know the feeling, but it's just not smart trading, right? Yes, there are setups that you're going to want to hammer. Like, there's no doubt about that either. There are going to be setups where it's like they deserve a lot of risk. They deserve a lot of attention. But that doesn't mean that every setup does. And I can tell you, something like Lucy, I would not call this A plus, right? It's in the B realm, maybe a B plus in terms of potential, but it's not going to be something that I'm going to say, I know I'm going to win this 9 times out of 10. It doesn't have all of the factors. And, we could talk about what some of those are, but truth be told, the point being is just that, like, even if it was an A plus trade, if you're in a massive drawdown, is it actually an A plus trade, or are you just like trying to make it into an A plus trade? Right. That's kind of the next question. Which only you would be able to answer. I'm speaking for myself here because I am in drawdown right now. But to me, this is very clearly not an A plus trade. Okay. Yeah, Lucy, unfortunately, I'm starting to lose faith, starting to lose some conviction here. Again, it's up to you. Like, I don't think this would be a bad spot to cut. I think we've kind of given it enough of an attempt now where it's like we couldn't hold that VWAP bounce. We broke under this low, couldn't hold VWAP, and then just rejected against VWAP there. Is it the key level? No, but depending on your own risk tolerance, like yeah, like depending on your own risk tolerance. By the way, I just cut there. Again, depending on your risk tolerance, it's like when it comes to this point for me, it's like, okay, we've just got enough signs where this isn't working. I'd rather just keep the loss even smaller and then be able to reattack on that 195 break if it does come. But at this rate, and I look at it pretty short term, right? I know some traders like, well, the low a day. And I agree. Trust me, I bite myself in the ass a lot. I don't know if that's a saying. That sounded kind of weird. Okay, we're going to forget I said that. I shoot myself in the foot a lot. I don't know. Maybe it is a saying. I'm imagining in my head there's a reason I said that. But no. So we get, again, step one. I'm always thinking, remember, and I'm actually going to write a blog about this. Not about biting myself in the ass, but instead about what I look for in a trade. And so one of these concepts, I call them confirmation variables that confirm or deny a trade thesis that I have, right? So on the long side, we've got that third day surge look to it, potential breakout. Then we've got our dip and rip right here, high a day, dip and rip. Awesome. Okay. Those are really the main confirmation variables. Lucy also had good news a couple of days ago on the day one of its run, held up decently yesterday. Now, as the trade starts to shift bias a little bit, I look at confirmation variables on the other side, variables that could confirm a different thesis. And all of a sudden, I start to see, okay, failed high a day break. Right here is the spot where we should theoretically curl around, hold VWAP, dip around. We tried to during this consolidation period. We couldn't. We break lows. We broke that last previous 185 low level. Then we tried to come back over VWAP and we reject twice and we just couldn't do it. To me, in the very short term at least, this is starting to scream not so fast. This may be a better short bias setup. And here's the truth, right? A third day surge is not inherently bullish, which I know is weird because we go through periods where third day surges work really well and they are really incredible breakouts. We also go through a lot of periods where third day surges are actually long traps where it's kind of looks like what Lucy is right now. We'll see what it ends up being. But third day surges can actually end up being some really big faders too, because they trap a lot of long bias traders who are like breakout, breakout, breakout. And they keep adding the dip, wanting this thing to go lower. And it doesn't. So it can be, it can be a really strong long when they work, but when they don't, and again, what I'm seeing in my mind right now is failed high day break and now red breaking low a day. At this point, it's like, all right, well, what shorts are trapped anymore, right? Maybe some from day one. Or if we go to zoom out to like a multi-day picture here, maybe some shorts from day one, but like that's only if you were shorting at the lows are you trapped at this point. Right? We're kind of down there right now. Anybody who's in from this kind of more mid-average of 180, sweet, you're finally up on your money again. You know, like you're chilling now. So anyhow, just wanted to kind of walk through my thoughts there again as I'm looking at trades like these. I try my best not to cut too early from a trade. I don't like to. But in the same breath, shout out to Tim Sykes, cut losses quickly. If there is some, you can always get back in the trade. That, by the way, those guys that use Trade Funder or any brokerage where you can trade as much as you want because you don't have to worry about the PDT rule, that's the benefit of it. You can always get back in, right? But for me right now, and this is another I'm just ranting now, by the way. So welcome to Bryce's rant session. I think one of the problems I've had in my drawdown recently is that I've actually been working on holding on to positions longer, which has very much so not been good in this market. That has not been the move in this market. The move in this market has been to be really scalpy, right? Get in, get out, take your profits quickly, and run to the next. And so what that's led to for holding longer is, number one, not taking as many winners, and then number two, taking full-size losses. I'm also holding all the way to my stop a lot. And over the last 2 weeks, man, that sucked. It's burned me a little bit. Actually, it's burned me a lot. And so one of those adjustments that I'm kind of just saying maybe I need to be making is I not only need to be scalpy on taking profits, but I also need to be scalpy on getting out of that trade if it's not working. That can lead to you getting chopped up in a range. But if you've got a good average in a market like this, in my opinion anyways, it definitely, your risk of that is slightly reduced. And for me, I'm already not winning much. So to lose less is probably a better idea. For me, I can speak for myself anyways. So bailed out of Lucy early. I'm glad I did because, well, it saved me. What did I get out at? 182? Looks like I filled at 181. But I mean, it saved me another probably 10 cents after that. Definitely would have caught slippage right here. So it saved me probably another 10 cents worth of money. Anyways, Lucy, like I said, it kind of, by the way, full circle. As I was saying here, if we break low a day, this probably turns into a really good short. And it did. It did turn into a really nice short so far. I mean, down what? Already just about 10 cents a share from red green. Actually, 10 cents a share, nearly on the dot. Well, anyhow, we're going to be done watching this, or I'm going to be done watching this. You can watch this. Oh, my God. Well, that would have been a fun short, too. Man, oh, man. Yeah, guys, by the way, I don't really have anything else to trade. Let's see here. With your years of with your years of experience of trading, do you experience a lot of fake breakthroughs? I've been trading for 5 months. I feel like that's how I lose the most. Yes, I actually have strategies built around fake breakouts now. In fact, if you read my blog, I'm going to keep pumping that blog, man, because it's fun. But my blog, I'm actually writing a full article on fake breakouts this weekend, showing how I use them both on the long side and the short side to help confirm a trade thesis for me. So for anybody that has, is there a link for your blog? I will drop it in just a second. How about that? For anybody that's been feeling that gets caught in fake breakouts a lot, I'd encourage you to read this post that I'm doing this weekend. I'm going to be doing a really deep dive. This will probably be a longer blog article. So basically the way I'm doing this is I'm going to do, I do daily trading recaps, right? Recap my trading day. And then I'm also going to be doing once or twice a week, I'll do longer form trading concepts, things like fake breakouts, things like sectors or themes that I'm seeing prevailing in the market, stuff like that. So anyways, for the blog, here's the deal. Again, I know we've got some more people in the chat room now too, or on the stream. Do I have to read yours and Matt's blog? No, you can just read mine. Matt sucks. I'm kidding. I love Matt. Much love for him. He's got a good blog too. He's actually the one that inspired me to make this blog because I saw him just posting. It looked like fun. And again, I'm in a drawdown right now. So it's well, I might as well do this to reflect on myself and to help other people, show you guys what I'm going through and how I'm looking to adjust on a daily basis. But anyways, what was it? Oh, yeah. Guys, for those of you who want to check out my blog, cool news. Again, I know some of you already know this, but because I'm trying to promote the blog and have more people read it, what I decided to do was I'm going to draw one random person who subscribes to my blog and comments on one of my blog articles. I'm going to choose one person at random next week to do a one-on-one trading review session. We'll spend like 60 minutes together on Zoom or like Google Meet, and we'll go through. And I mean, like literally just basically you're going to be joining me for a trading review, but I will also we can look at your stuff. We can review your stuff the same way that I like to review mine. Maybe I can give you a couple little pointers, things that seem to work for me, and give you a different eye on it from myself. So if that sounds of interest to you, I'm going to drop the link for my blog in the chat. If you're on YouTube or Facebook, you should see it popping up right now. Nope, not that one. Sorry. Wrong one. I wish I could delete it, but I can't. Next one. There we go. That's my blog right there. If you go ahead and click on that link, it's substack.com/@BryceTuohy. If you go ahead, subscribe, and comment on one of my posts, I'm going to be choosing somebody at random next week to do a one-on-one trading review session with. So I highly encourage it. And again, read through them. I'm having fun with it. So one of the reasons that I think this blog is so fun too, for me anyways, is because for those guys who don't know, back before I was a trader, so this is back when I was like a teenager, right? I loved writing. Like doing essays in school were one of my favorite things because I got to write, which I know is like weird, but it was the truth. And so I just remember in end of high school, it's like, it would be such a cool thing to like be a professional writer one day. I didn't know what that meant, but then in college, what I ended up doing was I would write blog articles, full circle. I'd write I'd basically be like an SEO writer, search engine optimization writer. And that's how I got paid. That's what paid my bills while I was in college. And then of course, trading worked out way better. You can make way more money trading than you can writing. But the big full circle is now I can write about trading and share with you guys some of my lessons and takeaways. So it's been a lot of fun, and I'm having a ton of fun with it. Unfortunately, I'm like getting addicted to writing again, which there's probably worse things to be addicted to. But yeah, anyways, encourage you to check it out. I'm seeing some of you guys are literally subscribing right now. So that's very cool. Thank you guys. I'll be posting every single day. Let's see. Tech Degenerate. I saw Tech is subscribed to my blog. I saw him comment the other day. Let's see. Tech said, honestly, it gives me hope to read that you're also in a drawdown. I had a hot August, September last year. Yeah, listen, the market's tough right now. I'm definitely, this drawdown is now officially getting into my head, which sucks. Like that, it's a terrible feeling. I'm letting it affect me way more than it should. But, it's part of the journey, and it's a good reminder. Tim Sykes put out a really good, let me see if I can find it. Tim Sykes put out a really good tweet yesterday. It was a good reminder for myself right now. Let's see if I can find it. Yeah, here we go. Shout out to Tim. You guys should know Tim by now. So Tim said, realize that the sweet isn't as sweet without the sour. So while it's a bitter pill to swallow, especially if your ego is in need of some key lessons, experiencing the losses, learning from them, and optimizing your process over time is the key to lasting success and financial freedom. Trust me, the journey is so worthwhile, so stay dedicated and patient, and you'll be handsomely rewarded in the long run. I could not agree with that more. Like, the losses, a lot of times, yes, the losses suck. They're never fun. But a lot of times they're needed to whip you back into shape. And then also, for those of you guys that know Lance, was it this one? Yeah, Lance. Lance Breitstein, really, really awesome trader. He said losing money is an indicator, right? Your P&L is the most honest trading indicator. Short-term losses happen, but if losses stack over days or week, it signals something your strategy or market approach is off. And so I, once again, completely agreed. And I'm trying to do a much better job than I have in the past of using this drawdown as a way to like literally tell myself, Bryce, something you're doing is wrong. Something you are doing is very much so wrong right now. You need to adjust. And so that's why I'm telling you here right now. Trading is amazing, but man, it can sometimes come with some just like feelings of questioning everything. And it's funny, I mean, I've been profitable for literally like 7 or 8 years. And every time I go into a drawdown like this, it's like, what do I do? And I always know what to do. The answers are always the same. But yeah, it's by the way, the answers for me, maybe I'll make a post about this too. The answers for me are normally, and I get in arguments with some traders about this because it's what works for you is what matters. I like to size down aggressively size down. And I can feel it now. The thing that matters more than anything else is confidence. Because I'm not going to sit here and say there aren't opportunities to make money. That would be a lie. There are opportunities to make money. But clearly the ways that I am good at making money are not working as well right now. And then that leads to this spiral emotionally where a couple of things happen at the same time. Number one, you lose confidence in your setups because after just a trade loss, you're like, oh my God, my strategy doesn't work anymore. And then traders go into a couple of different mental circuses. Number one, you can go into this mindset of, all right, I'm going to reserve, I'm going to dial back and wait for my setup. Or number two, what a lot of traders do, and unfortunately I even fell victim to for a couple of days and I'm coming back out of it, but it's like, I'm going to trade anything and everything to make back some money. And it's like, oh no, that is the worst thing you can do. But it's what most traders do. It's natural. You want to make back that money lost. And I'm not going to sit here and call myself perfect, but I do think I'm probably better than some at adjusting quickly and stopping that ASAP. This is where you can blow up your account. Trading like that is how you can blow up your account. And I don't want any of you blowing up your account. So if you're feeling like that, if you're feeling like you need to make back money that you lost, get away from your screen. Walk away. The best thing I did yesterday, if you read my blog, I'm not going to keep saying it, man. In fact, screw it. I'll show it to you. Instead of just telling it, they say show, don't tell. All right, this is my blog, by the way. If you read my blog yesterday, I had a small green day yesterday. Nice. But here we go. So my hope yesterday was that I'd do a lot of charting and review and journaling. I didn't do that. But what I did do is I got out of the house and did things that actually made me happy. AKA, I went and grabbed a beer and I had a workout. Not in that order. I worked out and then grabbed a beer. I know, simple man, simple pleasures, but it like going out and doing other things. And maybe for you, maybe it means working. Maybe it means literally whatever, right? Go out and do something else. Like it's better than losing money. I can tell you that. And so like on a day like today, all right, well, if not much is working. I'm just going to leave. Screw it. Who cares? Get me out of the house. Get me out of the damn house. By the way, 1 second. I actually need to close out a position that I'm in. Cool. And then one more. And Sorry about that. Thank you for being patient. I probably just looked like a freak the way I was looking at my screen. Oh, guys, where's the? It's still up there. Cool. Well, anyways, yeah. Oh, cool. George just downloaded the app for my blog. Oh, by the way, I'll say something cool too. I don't know about you guys, right? But so for those of you guys who remember back in the day, and when I say back in the day, I mean the good old days, 2020, when we were all locked down, we couldn't do anything, and our government shut down all our small business and everything. But the good old days of trading Twitter, right? Do you guys remember how much fun trading Twitter used to be? Those of you guys who don't know, it was freaking awesome. It was sweet. It was the best. There were good people on there sharing good trading ideas. It was cool. Now it sucks. And so when I started this blog here, it was mainly just a way for me to share my trading ideas. But what I kind of found is that this is like, there's a lot of cool people in this space. And it's definitely way smaller than Twitter or X, if you will. But no, it's like there are a lot of good, there's a lot of good value in here. I found from a bunch of different people. So listen, I mean, I think this could kind of be the next trading Twitter. I haven't found a bunch of people yet, but like there's good posts, good blogs. It's definitely more longer form stuff. And I've seen a lot of like investors, more investing, some options trading, but like they seem to just be people who just care about a little bit more about content. So I'm kind of bullish on Substack over Twitter for good trading content. So listen, if not just to follow my blog, there are some other cool people on here. And I think there's probably a lot to be learned from other folks. I haven't really vetted a lot of people yet, but definitely. Oh, look at this. I don't even know who this is. It said, tweaking edge in a tough small cap market. I'll have to read that. Give it a like. But yeah, no, it's definitely a cool platform. All right. Now, guys, by the way, yeah. Wait, I feel you. Dill, and this has, I think, been the problem for me with Twitter lately. I don't know about you guys, but man, it's all freaking bots, dude. It's literally all bots. They suck. They're so annoying. And it's like, dude, what are we doing here? What are we doing? You know, what's going on? Why is everything a bot, bullcrap, fake account now? By the way, 1 second. I'm selling a little bit more position I'm in right now. Cool. Jonathan said, I thought he said he was twerking the edge of small. He might be. John, we don't know. God, my head's all over the place at this point. So here's what we're going to do. I want to shout out my friends at Trade Funder really quick, by the way, before we hop off here. You guys, a lot of you guys already know about Trade Funder, I'm sure. But those of you guys that don't, Trade Funder, guys, it's a fully funded trading account. Also, let me grab this link for anybody that wants it, because Trade Funder is running a massive discount for traders on this stream. I just dropped it in the chat. So basically, Trade Funder, again, it's a fully funded trading account. It's going to get you access to $25,000 worth of capital and $100,000 worth of margin. And it's going to allow you to trade freely. You're finally going to be able to trade over the PDT without all these stupid restrictions holding you back. Pardon me. Cool. Yeah, you're finally going to be able to trade freely without a bunch of restrictions holding you back, which for those of you guys who are currently over or under the PDT right now, I'm sure you understand how frustrating it is. So Trade Funder, it's a prop firm, a proprietary trading firm. Basically, a prop firm, the way it works is they make money if you make money. Trade Funder has one of the best profit splits in the prop firm industry. It's at 80-20. But listen, here's the way I see it, right? This is it. Everyone is going to be in their own situation. I'm certainly not going to tell you like what works best for you. Only you'll know the answer to that yourself. But if it were me doing this, I would essentially be looking to, I don't know, let's say I make like 2 or 3 grand. I'd look to pull out my investment into Trade Funder out. So it's basically a risk-free investment, continue to grow that. And, then if I make a bunch of money, maybe I open up a second account. I can keep using Trade Funder, but maybe I can also open up a $20,000 or $30,000 account on my own too. Be able to have 2 different trading accounts. That's probably the way I would do it if I were starting over again. But again, you can read all the Q&A stuff, everything here. The way you use this is completely up to you. But they're running a $600 discount off of their normal pricing for Trade Funder. If you were to go over to their regular website and get access to Trade Funder, it would run you $1,400 plus a $99 platform fee. Because you're on here with me and hopefully learning to do this the right way, they're betting that you're going to have a higher chance of finding success. I sure hope that's the case. So they're going to offer you a discount, $800 plus a $99 platform fee. You can get access to that by going to the link that I've just dropped in the chat. So yeah, anyhow, I've dropped that in the chat right there, my friends. The link is on the screen. It's also in the description of this video. So if you're on YouTube, I don't know about Facebook, but if you're on YouTube, you will be able to see that right in the description there. So go ahead, check it out. And folks, one last time, just because I know we got a couple other people and I'm seeing some people actually chatting me on my Substack right now. Pretty fun. If you go ahead and again, dropping that in the chat, for anybody that subscribes to my blog and leaves a comment on one of my posts. In fact, I will send you a link right now in the chat to my most recent post. If you subscribe to the blog and leave a comment on a post, I'm going to choose one person at random next week to do a one-on-one trading review session with. So it should be a lot of fun. I'm excited to be able to do that with somebody. I think there's a lot to be learned. So go ahead, click that button, subscribe to the blog, and leave a comment. Let me know what you think of it. Guys, I'll see you next week. Again, this is also on the blog. I'll let you guys know my live stream schedule. Next week is going to be a busy one for me. I'm in Vegas all week, so there is a chance I don't make it onto the stream next week. I'm not too sure. We'll see. But yeah, folks, I'm out of here. It was great seeing you guys as always. I hope these streams help you in some way. I also hope this blog helps you in some way as well. So everybody, great to see you guys. I'll see you hopefully next week at some point. And remember, streams are going to be cut probably somewhere between like once and twice a week now, as opposed to every day. But we'll still be here together. Doesn't matter. I'll let you know the schedule on my blog. All right, everybody, peace out. I'll see you next week, hopefully. Bye.